What's up everybody? Welcome to the Stocks channel. My name is Corey and today we're going to look at weekly charts of all of the indices, the VIX and Bitcoin to get a better look of where the stock market is heading. First up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright. So first thing we need to pay attention to is that the weekly chart continues to put in new weekly lows and we have now been selling off for 5 weeks in a row. Now historically, when you start to sell off for about 4 to 6 weeks in a row of red, you are going to be due for a counter trend rally because nothing can go down in a straight line forever. Even though you do get these sort of capitulation sell-offs, that happened very quickly back in March of 2020, and it was a very quick flush to the downside, also known as a stock market crash. This is not a stock market crash. This is a very slow sell-off. It's very methodical and very calculated as everybody is exiting and nobody is willing to buy, and that is why we keep getting consecutive red weeks. So remember, right here on the Stocks channel, we follow the price action, and I was warning you that as we start to break down out of this bullish channel that we could be entering a bear market, and when you get into a bear market, you should be expecting lower highs and lower lows, and you should not be trying to call a bottom. So the first thing you want to pay attention to is when we broke down out of this channel, which was our support channel to the downside, we did retest that level for 2 weeks in a row, and we're clearly getting rejected from that previous support, which is a very common theme in technical analysis that previous support once broken now becomes new resistance. So you can clearly see that bull trend channel is now acting as resistance, and we clearly got strongly rejected from the 4300s. And I did warn you that if you were thinking about panic selling, you're much better off selling on these bounces at resistance and not panic selling at the bottom. So if you wanted to panic sell down here at 4100, your exit was the retest of 4300 and not any sooner than that because you don't want to get in the habit of selling at the bottom. We're going to get into some of the psychology in the bear bull survey later about where the stock market is likely heading in the future. But right now it's very clearly heading to the downside, and we do have downside price targets down here right around 4,000 and right around 3,900. So there is going to be strong support at 4,000 and 3,900, but there's no guarantee that we have to bounce off those levels, and we still do have valid price targets all the way down right around 3,700. So in the short term, I do think there's a good chance we bounce off this support and get some type of counter trend rally. But because we're looking for a lower high, that counter trend rally might only take us back up to retest the 4300s, and we could still put in a lower high from there and continue to trend lower. And I did draw this downward channel because, as you can tell, lower highs and lower lows do make a channel to the downside. So we went from a macro bull market to what now looks like a downtrend until it's not. And we can't get bullish until we start breaking out of this downtrend and start seeing price action breaking back above the 4500s. Remember, in order to reverse lower highs and lower lows, we need to start putting in higher highs and higher lows. And the next higher high at this point on the weekly chart will be back above the 4500s. Even though on smaller time frames, we can start to develop a bull trend and then eventually get that breakout at a later date. So we need to see higher highs and higher lows to say that the bear market is reversing, and we don't have that, so we cannot say this bear market is close to being over. What we do know is that in counter trend rallies, that is the best time to either try to short at resistance or exit your long positions so that you're not completely exposed to more downside. I'm not saying it'll happen, but if we do see a drawdown of over 30% and you don't sell out of any of your positions and you have no dry powder, which is cash, you won't be able to take advantage of those lower prices. So just be aware that we are in a downtrend, and just be aware that when we're in a downtrend, there's no telling how long it can last. We can make all kinds of predictions about where the bottom might be, but at the end of the day, only the price action can tell us where the bottom is and where we're finally going to see buyers stepping in and the selling slowing down. Now, putting on the moving averages, you can see that all of the moving averages are negatively sloping and the price action is below all of our moving averages. So there's really no bullish momentum anywhere you look. We need to see buyers stepping in at strong support, and we need to see a reversal of the bear trend. So to the downside, watch those critical price targets at 4,000, 3,900, and if we break below 3,900, you're looking for support all the way down there at 3,700. Respect the fact that we're in a downtrend, so you shouldn't be taking on too much risk. And I know a lot of you are trying to call the bottom and you're trying to time it with a lot of call options and things like that. And that's just way too risky for a downtrend. I would caution you against trying to predict the bottom and just go with the trend. And just like in the bull market, when all the bulls were buying at support, aka buying the dip, you just want to go a little more risk off at resistance and possibly even add on some short positions and just go with this trend. This is a very clear downtrend, so if you're trading in the direction of the trend, you are more often than not going to have a higher probability chance to make a profitable trade. So the next thing I want to do is take a look at the bear bull survey, because there is a lot of important information when you look at investor sentiment. This is usually a contrarian indication when you get way too many people stacked on one side of the trade. And right now we can clearly see the bear bull survey has a lot of bears and very little bulls. Over the last 4 weeks of this survey, we were under 20% bulls, and just this week did we finally break back above 20%, but we still have over 50% of the people that are bearish. Now, why is this historically significant? Is because if I go over to this next chart from macro charts, which you can see the Twitter handle in the bottom right of your screen, historically when we've had bear bull surveys where there's very little bulls, that has been very close to market bottoms, and that has been a great opportunity to start adding on risk. So when I say adding on risk, I'm talking about long-term investments, and I'm saying that if you're accumulating down here at these prices, you are more than likely getting a fairly good deal just based on this historical survey alone. The reasoning behind this is because if everybody is bearish and nobody is bullish, there's a good chance that the market is about to reverse soon, because when everybody stacks up to one side of the trade, the market will usually go in the opposite direction to create the most pain possible. So if a lot of people are bearish, they're either shorting this market or they're selling, and that means if they're out of the market or they're shorting the market, they're going to miss the next rally, which will make the next rally even more impulsive as people start FOMOing into the market or their short positions start to get squeezed. So keep in mind, this does not guarantee that we are at a market bottom, and this does not guarantee that a market bottom is even close. It is just something to be aware of, so that if you're getting overly bearish, this is just a contrarian viewpoint to give you some other reason to possibly consider adding some bullish positions for the long term. If you just completely put on the blinders and you're overly bearish and you have no way of thinking about any bullish possible outcomes, you are going to get caught off guard if the market starts to rally from here. So just be aware of the survey and understand that it doesn't guarantee anything. Now jumping over to a weekly chart of the NDX, you see a very similar sign as the SPX, where we got rejected, broke down below the bullish support channel, retested that level as resistance, got rejected, and closed at a new weekly low. Now, one thing to be aware of is that we have been selling off for 5 weeks in a row, and we still do have a gap on the weekly chart up there at 14,307. So there is a good chance if we start to get a counter trend rally that we are likely going to start trending up there to fill that gap. So with downside support very near right now, which is right here at 12,439, we could go a little bit lower, bounce off that support, and then get a very impulsive counter trend rally to go close that gap. But I do want you to pay attention that that gap is still at a lower high. We need to break all the way back above 14,870 before we can make a higher high, and that is a long ways away. If we measure as a percentage, that's over 17% to the upside. So yes, in bear markets, you can still take long trades at support, and yes, in bear markets, there are still going to be counter trend rallies, but you're going to want to get out of your position as we approach a lower high, because that is more than likely where we are going to find resistance. If I just draw a parallel channel right here on this chart, you can see that we are very likely going to get rejected somewhere at a lower high. And if you just extrapolate out where that gap fill is at the top of the trend channel, that could take us to fill the gap by the end of the month in May. So there is a real possibility that we get a very impulsive bounce off of this support level, go up there and fill that gap, and still make a lower high and continue to trend lower going through the summer. This is a very real possibility in a downtrend, because downtrends consist of lower highs and lower lows. So if we go fill that gap, that doesn't guarantee that we have to get a bullish breakout and go back into a bull trend. We can still get rejected at a lower high, go right back down, and form a brand new lower low as this bear market continues. So don't get overly bearish as we come into support. We're getting very close to the channel bottom, and we're getting very close to some very critical support levels. And we still do have a lot of outstanding upside price targets that we are more than likely going to fill until we reach the final bottom in this bear market. Or for all we know, we are already putting in the bottom, and we could bounce out of here and go back into a bull market. We don't know for sure, but we follow price action, and that is all we know right now, is that we are in a bear trend. The NASDAQ 100 has drawn down over 20% from the previous all-time high, so the NASDAQ 100 is also in a bear market. So just be very cautious in bear markets, because if you look at other bear markets like the ARKK ETFs, you never know how long that bear market is going to last or how low the price can possibly go. If you think it can't happen to the SPX and the NDX, you're wrong. It has happened many times throughout history, and we don't know where the bottom is or where this downtrend is eventually going to end until we see confirmation in the price action. On the Dow Jones weekly chart, we see plenty of confirmation of more bearish price action, closing at a brand new weekly low. And as I told you in the Dow Jones, we are breaking out of this trading range to the downside. This is extremely bearish if we continue to break out of this trading range, because we are more than likely going to a full measured move lower, which means the Dow Jones is more than likely trending all the way down to about 31,000. So you just need to be very cautious as we break down below 33,000. This is extremely risk off. Even if we get a bounce to a lower high, that is still possible. We get rejected and then go trend down there towards that price target. On the Dow Jones, I would not be getting bullish until we can get back above 35,000 because we are more than likely trending lower until we get that bullish breakout in the price action. So respect the fact that the indices are trending lower, but also don't rule out the possibility that in the short term, we are just way too oversold and we are due for a bounce once we hit a support level. Remember that these indices have been selling off for 5 weeks now, and if you look at the Dow Jones, it has been selling off for 6 weeks now. So when you get this sold off, you are more than likely going to bounce in the short term. Don't think that just because we bounce that it is bullish. A bounce from here should be treated as a lower high before we get rejected from resistance and continue to trend lower until the price action proves otherwise. So on a lower high, you're looking for a rejection somewhere around 33 to 34,000. And then a continuation of the downtrend until we get proven wrong with the Dow Jones breaking back out above 35,000. On the Russell 2000 weekly chart, you can see the Russell 2000 is in a very strong bear trend and a very aggressively sloping downtrend. And you can see our price target down here at 1700 is getting closer and closer by the week. The Russell 2000 has only been selling off for 3 weeks in a row because 4 weeks ago we did get a bounce. And we did break down out of that trading range, which looks like a giant bear flag on this weekly chart. So it is more than likely the Russell 2000 is going to come down to this price target at 1700. But like I said, the indices may be due for a bounce in the short term. So we may bounce, come back up to retest the breakdown right around 1960, get rejected from a lower high, and continue to trend lower towards our price target as we go on through the summer and June. So just be very aware that these are all downtrends. So you need to be very risk off and you need to be very careful on where you're buying your long positions. So just have a lot of patience and only buy at very strong support or very oversold conditions, and make sure you're getting a lot more risk off as we come into resistance levels. On the VIX weekly chart, we actually see a bullish indication this week. The indices were selling off and every single index did close in the red. However, the VIX did get crushed in the same exact week. The VIX closed 2 weeks ago just above 33, and this week the VIX closed just above 30, so it did get crushed down by about 3 points. And that is actually a bullish indication that we could be nearer to a bottom than we realize. Remember, we've been selling off for 5 to 6 weeks now across the indices, which does mean we are more than likely due for a bounce, even if it's just a relief bounce or a dead cat bounce. It does seem like the VIX is starting to price in the possibility of a bounce because we do see the VIX getting crushed. But just please keep in mind that the VIX is still elevated and we're still in a very volatile market. So this doesn't guarantee that we have to bounce. While it looks likely that the VIX is predicting a bounce is coming, we still have the VIX trading well above 30 and it could easily spike back up to 38. And it's more than likely a high volume panic selling that spikes the VIX above 38 will be closer to the bottom than we realize. We don't know where the bottom is or if we put in the bottom or it's coming right around the corner, but the VIX is hinting that we could be bouncing in the short term, so you will want to pay attention to that as well. On Bitcoin, we're currently trading at the bottom of the support channel right around 35,000, and we did lose that very critical support zone right around 37,000. As you can see, Bitcoin has been selling off for consecutive weeks, and it is more than likely due for a bounce as well. Now, if there's anywhere Bitcoin would bounce below 37,000, it is going to be right around this range at 35,000 because that is the support channel below. Now, if we do bounce from here, we still need to get a bullish breakout above about 42,000, and we can't say it's a bull trend until we get confirmation of higher highs and higher lows. This is a very strong bear market, and it's more than likely Bitcoin is trending down towards 30,000, but we can't forget that it is sitting at support at 35,000. So we can't just say it is going straight down to 30,000 without a bounce until we get confirmation of a breakdown below this support zone. So watch 35,000 because if it breaks, it should be a quick chip down to 30,000. And if we lose 30,000, you're looking for stronger support right around 28,000. These are very good buying opportunities for Bitcoin if you are bullish in the long term. So if you are a long-term Bitcoin investor, you may want to consider accumulating at these levels and not trying to time the bottom perfectly. If you look at the previous all-time high, Bitcoin has already drawn down about 50%. So these are getting into the good buying opportunities if you are bullish in the long term, whether it be on fundamentals or you just want exposure to cryptocurrency in your portfolio. So if you want bullish confirmation, you're waiting for a breakout above 42,000, or you're trying to accumulate right around 35,000, 30,000, and 28,000. On the ARKK ETF, there's really nothing to say that we haven't already said. This is extremely bearish, breaking down below the only critical support trend line that ARKK had, and we are going back down to prices that we haven't seen since 2018. There is no reason to be bullish on this ETF, and there is no guarantee this ETF ever has to go higher or ever has to retest all-time highs. So I'm just trying to zoom out on this chart so you see the big picture. There is no reason you should be buying this ETF until it gets some sort of confirmation of a bull trend. This thing is going to continue to trend lower day after day and week after week until something changes and there's some sort of bullish catalyst that sends this thing back into a bull trend. This is extremely risk off, and you should only be shorting this ETF at resistance, and you should not be accumulating it for the long term because this is not an index and there is no guarantee it ever has to go higher again. So jumping back over to the S&P 500, just remember that we are in a downtrend until we're not, so you need to be very cautious and very risk off while we're making lower highs and lower lows. And in the short term, as we're coming into very strong support and we're getting oversold, we are likely due for a strong bounce and a strong counter trend rally. But don't just assume you caught the bottom and try to hold your long positions. Take risk off the table at the lower highs because you're always going to see in the price action when we return to a bull trend. So don't bother getting FOMO in a downtrend. One of the biggest mistakes you can make in a bear market is continuing to think you caught the bottom and continue to try to swing your long positions and then get caught holding the bag as it makes lower lows and lower highs, and you continue to make drawdowns and you're never locking in any profits. Don't be greedy in a bear market. Lock your profits in. Take the bird in the hand and get ready for the next best buying opportunity. If you're a disciplined trader in a bear market, you should be doing very well. But if you're getting greedy and you're trying to swing your long positions for far longer than you need to, you are going to lose all of your profits and you're eventually going to see them turn into losses. Lock your profits, trade in the direction of the trend, or be very patient and only accumulate at very critical levels. So it's going to be a very critical week because we're coming into very strong support. We're in a confirmed bear trend and the NASDAQ 100 is in a confirmed bear market. So be very cautious of more downside and just be sure that you know exactly what your trading plan is and that you're remaining patient and remaining disciplined. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. You could see in the bear market of 2008 when everybody was losing money, Bank Trade Alerts still beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you could click on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.